Good evening, everyone. Today is Wednesday, October 19th, and here's another edition of Tone's Market Analysis. We have a very important day today, so I'm running a little bit late. I have 15 minutes before the start of tonight's presidential debate, so this will be a slightly shorter video of the market analysis, even though this is how much time I should be spending on them. I was just speaking at a conference yesterday in DC. My upcoming speaking schedule, I will be in Las Vegas early next week for Coin Agenda, even though it's at the same time as Money 2020. If you happen to be in Argentina, I will be there the first week of November. And after that, I am probably going to speak in Russia, working on my visa now. That is not on my schedule. I need to update the schedule on my blog. Okay, so let's get right to it. Just a very quick look at the futures, just to see if anything happened since the close of market a few hours ago. As you can see, nothing really major is happening. The futures are already up a little bit after hours, but tonight is the third presidential debate. It is important if you are invested in the markets. The way I've described it in the past is the general expectation is that Clinton would win, even though I disagree with that, but maybe I'll talk more about that after this third debate. And the Wall Street is in support of Hillary Clinton. So if it looks like Hillary Clinton is winning, the markets will go up. Now, whether they go up after the election is a different story, but Trump is a wild card, and people will be nervous if it looks like Trump's going to win, and the markets are going to fall, just like during Brexit. Everyone thought that Britain was going to stay, so the markets were going up, and then the surprise happened, and the vote was to leave, and the markets immediately crashed. The stock market since then recovered, but the currency, the British pound, has not. We talked about that on the last video. So that's kind of your expectation going in. All right, let's just, before we jump into the market, I'm going to try and do like one macro chart or one macro story. Maybe I can zoom in on this a little bit. Okay, so here we go. So it looks like inflation is ticking up. These are a couple of headlines from FT. That's the UK inflation going up a little bit. And here is the Eurozone. Also, you can see inflation is creeping up. So what does that mean globally? The CPI came out for the US yesterday. I don't have those charts, but it's also ticking up a little bit. Take a look at China over here. It's the opposite. Instead of inflation picking up, they have it as deflation is ending. And it's the first time we have that deflation is ending since 2002, like early 2002. So it's been a good 4 full years of deflation, if not 5, almost 5. So here's another chart. What's the source? I forgot. I think it might have been Morgan Stanley. I don't have the source posted on this. And they're showing you that real assets are undervalued versus financial assets. And it's the lowest they've gotten in almost 100-year history. So real assets are basically assets that you can hold, things like gold, things like real estate. And they're judging them as undervalued versus the financial assets. If you look here and during the Great Depression, that's when you can literally buy land for 10 cents on the dollar. Property really crashed, even worse than the market. Okay, so now we can jump right into the stock market. Let's go to the S&P 500. I'm not going to be taking a look at any weekly charts today. We're just going to go through the daily. So what we were talking about last time, and I'll redraw it. I don't mind redrawing these. It just allows me to take a fresh look at things. We had this triangle, and we broke to the downside. And when we broke to the downside, I didn't trust it. The reason I didn't trust it is because of the election that's coming up. Then we had this very clear reversal hammer candle, which I pointed out as saying this is a sign that we might have a little bit of upside, and we do. I'm still expecting a very, very choppy market. In fact, this market has not been nearly choppy enough. I thought it would be worse. I thought we would go down more pre-election, and then I thought we would swing up even more pre-election. So we are headed up. Let me do this from that candle, and we are going to hit the 50-day moving average perhaps quickly if we continue to go up. That is kind of what I'm looking for. Now, another way, another thing I'm looking for is, let me see if I can delete that. Well, there you go. If it looks like Hillary's winning, I can certainly see the market rallying significantly into the election. And then if Trump has a surprise win, which is very, very possible, we would get one of these on fear and perhaps come down to the 200-day moving average. And then from there, everybody will be bearish. Everyone's going to think that the world's going to end. We might have to go down lower than that. Keep that in mind. And then we go back up to new highs. But with the election coming up, I'm expecting a lot of choppiness. I am looking for the markets to rally a little bit more, even though the breakdown of the triangle is generally putting a bit of a bearish tone on the market, and our momentum indicators aren't all that useful at the moment. Let's briefly take a look at the NDX, see if we see anything different there. Netflix had an amazing earnings announcement. They went up like 20%. We had Apple is still going up. Everything looks even more bullish. Google has been doing really good. It's up to 800 with earnings coming up next Friday. Amazon's earnings are next Friday as well. NASDAQ has not gotten to our new all-time high, but we're staying above the 50-day moving average. So it's looking pretty neutral right now. Can't really say much about the NASDAQ. All right, let's jump to gold. And gold is really interesting because look at where it closed. We closed at 1269.9 for the day. I mean, it is the futures market, so it's trading again. Now we're at 69.40. This is probably on a 15-minute delay, if I most likely. So what I've been saying about gold for a little while, I wasn't interested in gold unless it broke out of this range here between 1250 and 1270. And it looks like we are on the verge. So if tomorrow we have we're breaking up, if we open higher tomorrow and we're making new highs into like 1272, 1273, then I become bullish on gold, in which case I am going to look for gold to go up to the moving average, which is going to be very interesting because we have a very significant Mendoza line around here, our very crucial horizontal support resistance line. It's around the 300, 310 area. It's kind of a thick line with the $10 range. But that still gives you a good 30 plus points to get there. And once it gets there, it will meet the 50-day moving average. Other things that are looking positive for gold is this right here. We hit an oversold condition, and now we're creeping back up. And we are 1 day away from crossing on the MACD. So everything is looking good and on the daily chart of gold. And now that we are about to be above 1270, this is where I become slightly bullish gold, even though the most likely outcome after we get there, oops, didn't mean to do that. Let's do an arrow. Trend line, arrow, red. After that, this is also likely, but of course we could break out. So if I can make this like kind of like a more of a dashed line, as in, well, we can't be certain what's going to happen. Let's just see if we can make it back up to 1300. So now that we've broken out of the zone, I am looking, I'm bullish gold. Now, so that's, I guess, the good. Now let's talk about the bad. So oil. So over the last few weeks, I have a pretty good memory, so I remember what I've said. What I said was, looking at these two bearish haramis, I was bearish oil. And I thought oil was my ideal trade out of the major indices commodities, was looking for it to go back down and test that 50-day moving average, which isn't all that significant, but it has a nice round number of 45 nearby. I should have drawn the arrow a little bit lower, down to like the 45 area, and then go back up from there. But I also said that this trade would have had a really good risk-reward ratio, with this being a stop loss area. And your risk would have been about $1.50 on oil. Your reward would have been about $4 to $5 on oil. So that was a good risk reward view for me. It also looked like the MACD was ready to cross right here, and you can see how close it got before doing it. And I think I've also mentioned that the RSI never really made it to the overbought area, which allowed room for the upside. Now that we're closed and made a new 6-month high, it does look like oil can make one more leg to the upside. How far can it go up? Hard to say, because now we're at 6-month highs. But at the moment, my idea for bearishness in oil is completely off the table. And now it does look like oil is ready to break out to the upside. We can take a quick peek at maybe 1 year back without going to the weekly chart, to see if we have a bit of a benchmark to look for. And we don't. We're really making yearly highs here. So that isn't helping us. So we go back to fill the chart and we make it weekly to take a look at 3 years back. So I'm sure I must have mentioned it before, but if we look at 3 years back, once we break out, it's really open air for a little while. Yeah, I guess we are looking at weekly charts today, for at least for oil. Now that we've broken out, and you really want to see it over the weekend. Oops, get a circle here. This has crossed back up to the upside, and it looks like it has room to run. We still have room on the MACD before we go to weekly overbought. And on the price end of it, we have room. We have room to at least a 60, if not more. The reason I say 60 is because, let me do one of these. Draw it with a click of a mouse. This line is in that 60 area. So that is your first new level of resistance, followed by the 200-day moving average. Now, if we get back to that 200-week moving average, if we get back to that 200-week moving average, the RSI will certainly be overbought, which could set up nice downside for oil. Another thing, now that I'm looking at this chart, what a beautiful weekly, I guess that's a dragonfly doji candle, right at the 50-week moving average that is starting to turn up. And if you look, it had a little uptick here. So this is kind of textbook. We go up. Am I on? Nope. It's kind of textbook. We break the 50-day moving average. We come back down and test it. And then we go up. So we break over it, come down and test it. And then we go up with a little bit of a second test. to the 50-week moving average. So that was a bullish close. The week isn't over. This is a weekly chart. You want to see a weekly close. Things can change. You can definitely get whipped around in the markets. No one knows everything that's going to happen. Anything can still happen. But I have to flip my position. I was bearish oil, and now it looks like it may have some more room to run now that it closed at a new daily high, looking at a new weekly high if we can close it in this area over the next 2 days. So let's keep an eye on that. We'll revisit it again over the weekend. So now let's get back to the US dollar. The US dollar may have temporarily topped. It had a good run. And this is another reason why perhaps gold is about to go up and oil is about to go up some more. We had a good run, guys. And now it's consolidating. It may just consolidate for a little while. Let's do this. We have consolidation right here at 98 and 97.50. If we can fall below 97.50, there is lots of room for a retest back to the moving averages. And unlike the other assets, the traditional moving averages seem to actually be kind of useful over here as well until we broke out for a little bit. Then we happened to go below it. So even though the 200 days kind of flat, it seems to be kind of useful. We have an overbought condition here. We have not yet crossed on the MACD, but if we can fall out of this range, I can definitely see some downside in the dollar. That looked like it's not really, the candles aren't really helping you, but the dollar seems to be a little bit overextended. So maybe there is some downside there. So again, if you're seeing the dollar go down, if you're seeing the oil and gold have a little bit of a run, then that's where things might be going for a little bit. Let's just take a look at euro for a second. I have not looked at this since our last video. Yeah, euro might be bouncing up a little bit. So again, if the dollar has a little bit of weakness, the euro may have a little bit of an uptick. But again, my long-term view on the euro, I should probably pull up a weekly chart to do this, but it doesn't matter. Even if we go up, my euro projections are as follows. Probably do another video on the euro later on. I'm curious about GBP because it had that huge wick, which I said looked like capitulation, and GBP is about to make a little bit of a run. Oh, it's looking pretty good. If you look at the RSI, we're back out of the oversold condition. The MACD is getting ready to cross in a day or two, though let's not count our chickens before they hatch. We got plenty of room back to the 50-day moving average. And if the dollar has a little bit of weakness, GBP can certainly get back to around the 126, 127 area, maybe even 128. Eventually, the British pound will also fall, but I think the UK is in a much better position than the European Union. Right, and finally, let's just talk about Bitcoin. We lost about $7, $8 on the price of Bitcoin. This is actually a good thing, in my opinion, because Bitcoin still looks very bullish. I do want to cut this video short. The debate started 5 minutes ago, but as you can see, we are above the 50-day moving average. And we might be pulling back to that average. So if we go back down to about 620, that would be a pretty good, let me make this green. That would be a pretty good support line right here. Right at that 620 area. By that time, the 50-day moving average would have also come up to meet it. And that would be nice. It would give a chance the 200-day moving average to catch up a little bit. And if you, I'm not I don't really want to draw these triangles right now, but I'll do it over the weekend. You had a big descending triangle right here in June, July, and then we fell and met the target. Then we had our ascending triangle between August and September to break out in early October. We hit the overbought condition on the RSI down here with the red circle. And now we're quickly falling out of it, which is also good. We're relieving the overbought condition. If we're lucky, we'll come all the way back down. But then again, you also don't want to see a big crash. Maybe I'll talk about the potential fork in Bitcoin over the weekend, but I'm trying to focus more on the traditional markets. But I'm still bullish Bitcoin. This little fall isn't scaring me. In fact, I would love to see it fall back to the 620, maybe even 615 area before another reversal to the upside. All right, guys, if you like these videos, please subscribe. Please rank it. Check out my blog, Liberty Life Trail. I'm going to start putting up some original content on there soon. All right, thank you, and good luck trading the rest of the week.